Oh, hi, everybody, to our webinar, Crypto Markets Made Simple. The waiting room is filling up, so we give the participants 1 minute to join. So we wait a little and then the webinar will start. Okay, so I think we can start. So welcome everybody. It's a pleasure speaking to you today about our latest product innovation, the COIN50 index, together with Coinbase. My name is Martin Leinweber. I'm running our digital asset research and strategy at MarketVector Indexes. We are an EU BMR regulated index provider and do digital asset indexes since 2017. We are proud to partner with Coinbase on this new broad basket, and I'm very excited that we have the opportunity to present it to you today. So I'm not alone. I have a co-presenter, David. So David, maybe you do a little introduction.
Oh, thanks, Martin. So I'm David Duong. I'm the head of research here at Coinbase Institutional. For anyone who doesn't know, Coinbase is a large crypto exchange. I lead our research efforts at Coinbase, and we discuss crypto markets with an institutional audience, and that covers anything from crypto-related themes to how macro is kind of affecting the assets in our space. So Martin, thank you so much for having me on, by the way. Like, this has been a very exciting partnership for us. You've obviously worked with indices for a very long time, but we still get a lot of questions on our side about, why are indices vital in financial markets, for example, how it helps funds and then portfolio construction. And I know it's kind of basic, but can you just talk a little bit about this?
Of course, yes. So it's my pleasure. I think, especially when we talk about cryptos or in the crypto world, everybody is so focused on single tokens, yeah, on Bitcoin, ETH, or Solana. You also see that on the product side in Europe, yeah, you have a lot of single ETP products. In the US, you have a Bitcoin ETF, a Ethereum ETF, and now you have other applications. But I think there are some really good points why you should have a basket. And for that, I'd like to share my screen. So I think there is a good analog in TradFi. So we know that stock picking is very hard, and I think it's even harder when it comes to the crypto world, right? And what we have here, for example, this chart is a beautiful representation. David, if I had asked you at the end of the 90s for a stock pick, and we would all have known that we are in the age of the digitization, crypto, and AI, you probably would have picked a chip manufacturer, and you probably would have picked Intel, which was the largest producer during that time. But as you can see, over 25 years, Intel did basically nothing. And it was all about NVIDIA, but it was very small during the time. So for most of the investors, it would have been better to pick the S&P 500. And also an interesting fact, NVIDIA joined in 2001 with a weight of 7 basis points. And today, NVIDIA has a weight of 7%, so 100x on the weight. And that's also a point for market cap weighted indexes. It's an implicit momentum strategy. Yeah, so you're buying the winners increase in weight, the losers decrease in weight or drop out. And so here we say, okay, maybe Ethereum is the next Intel and Solana is the next NVIDIA. Before I get all the hate, we love Ethereum, and I don't think Ethereum is Intel. It's just a thought exercise. But at the end of the day, we don't know, right? Maybe it's Sui, maybe it's another coin in the future. But I think it's fair to say that the coin 50 is maybe the S&P 500 in crypto. And also another point here, if I go to the next slide, another challenge in the crypto market is that you have a great rotation within crypto. Yeah, so you definitely need a dynamic strategy, and indexing is not a buy and hold strategy. You can buy and hold an index product, but the index in and of itself is a dynamic strategy which gets constantly rebalanced. And what we've done here on that chart is that we took the top 100 tokens and coins in 2019. And what you can see after 5 years in crypto, you have a survival rate of 22%, meaning just 22 index components or token stayed in the top 100, and the rest is somewhere, I don't know, uh, not material and important anymore. And so I still expect that this will hold true for a longer time. And so it's even more important that your index is adapting to this new environment and that we have regular rebalances. But we come to other details, I think, in the next slides and questions.
Yeah, I think that there's some important takeaways there. And certainly number one is the ETH analogy was most definitely a thought exercise that I had nothing to do with, and that was all Martin. So if there's any hate mail, please send it to Martin. And number two, the dynamic benchmark. I think that's excellent because I mean we've got like these millions of tokens out there, and it seems like we're getting more by the day. And of course, a big part of that's meme coins and other things. But just the scale of this market is so daunting for so many people. Like, how do you think that's like having a broad index kind of addresses that complexity? And also not just addressing that complexity, but how do then investors get meaningful exposure to the broader market?
Yeah, excellent question. So I think the chart speaks for itself. Yeah, so what you see here is the number of unique crypto tokens over time. And that's from Dune Analytics. And we always had a lot of tokens, but what you can see that we are really in an exponential phase. Yeah, so currently 36 million, give or take. And I've read expectations that by the end of 2025, we have 100 million token. You see the yellow area, that's basically meme coins and Solana. Yeah, you get more and more of that. You get more AI agents. You have a lot of activity on Base. Generally speaking, what you see is that the cheap chains, yeah, the layer twos, Solanas, makes it just easy to issue a token. And so it's fair to say that we can expect even more going forward. But the good message is that the market cap is so concentrated that with a top 50 token index, for example, you have, roughly speaking, 84% of the total crypto market cap. That's also dynamic. Sometimes it's 90%, a little bit lower. But I think it's fair to say that on a conservative estimate, it's more than 80%. And that's a good basis to capture the crypto market return. And that's basically what we do with this new product, right? And if you want to allocate and you're not sure what to buy, think of a larger investor, then it's just handy to invest in this index.
Now, I really like that a lot because, I'll be honest, I've done this, and I think a lot of people have done this in the past. We've kind of used Bitcoin as the default proxy for the crypto market, and we do everything with that, right? We calculate beta off of Bitcoin performance. We calculate just the overall return of the crypto market. But you've kind of already alluded to the idea that there are limitations with that. So could you kind of talk about some of the specific risks or maybe just the gaps that investors face when they rely solely on Bitcoin for market exposure?
Yeah, sure. So, I mean, Bitcoin is still the granddaddy. It's still one of the most important coins. And as you can see here, that's the Bitcoin dominance. So Bitcoin market cap divided by the total crypto market cap. What you can see long term, the Bitcoin dominance is coming down. Of course, you have some cyclicality here. Yeah, so with every bull and bear market, Bitcoin established at a lower and lower level. Now we are still roughly at 60% or 58%, right? Around that number. That's still a lot. But I think forward looking, it's fair to say that we will have other use cases. I think DeFi will play a more important role going forward. Gaming token, I mean, we basically have seen nothing, but going forward, that will play an important role. We have more layer ones, which will get larger. You're already seeing that with Solana, and of course, you have the whole AI part. So that I expect after the next altcoin rally, I mean, we are all waiting for that this year, right? For this great altcoin bull run, that maybe we get a Bitcoin dominance of below 40%, something like that, right? And so you can say 60% of the market is then something else. And how do you capture that? And I think that's a very important thing people have to keep in mind. At the moment, yes, Bitcoin, it's maybe enough to say I just own Bitcoin and it's the market. But don't expect that this relationship stays at 60% for in perpetuity. I don't expect that. And so if we go to the overall performance, I think most investors are interested in the performance of the index, of the Coinbase 50 index. There are two observations. So one observation is, and when I talk to investors, most of them are surprised that it's better than Bitcoin. Yeah, people don't expect that. They think if you add altcoins, you underperform for sure. And you also see that, secondly, on the ratios. Yeah, so even on a risk-adjusted basis, if you look at the Sharpe ratio, it's higher than Bitcoin. BBR is our Bitcoin benchmark. And Bitcoin is a very tough benchmark to beat, right? And what's also a good sign, and people can check that for themselves, the index reached already a new all-time high very recently. My personal wallet didn't do that. I think most of the investors' wallet as well. So a lot of altcoins are still underwater. And so I think what I like about this concept is that we have a modified market cap weighting, meaning Bitcoin still has a high weight, but it's kept at 50%. So we have a better diversification. We do a quarterly rebalancing. So we get new winners in and maybe losers out. But and it's also one important aspect. It's also Coinbase screens, right? We use your universe. It has to be custodied at Coinbase. And there's one also important aspect. We also have a fundamental and eligibility screening. And that's my question for you, David. I mean, that's your IP. You screen for some fundamental factors. And I think especially when it comes to altcoins, a lot of people are cautious in investing, question a lot of protocols. And I wonder, how do you do that for the index? And what are your findings and most important factors to consider here?
Yeah, absolutely. And it's good that you intruded with this question, because I was just about to ask you what your favorite altcoins were, but then you told me your wallet wasn't performing well, so I was like, all right, maybe not that. But
Good.
on the fundamental screening and the rules-based methodology, I think this is probably the question we get asked like just most often, like what's the fundamental screening process for the Coin50 index? And of course, as you mentioned, given how quickly the crypto space is growing, I think navigating it is definitely a challenge. Like the Coin50 index, it relies on a comprehensive, rules-based methodology that ensures both sound selection and flexibility. Now, that's a lot of jargon I threw out there on this. What do I mean by that? Well, fundamentally speaking, we look at several key criteria. First and foremost, token economics. We do a deep dive into the economic design of these tokens. We ensure they're, say, not pegged to other digital assets or fiat currencies, because we want to make sure that a significant portion of their supply is actually publicly available. And that filter alone probably would have helped us avoid tokens like Luna and FTT in the past. And of course, Coinbase has had other indices, and we in fact use the same kind of criteria, and we did in fact avoid Luna and FTT in the past. And we also assess, the blockchain architecture itself. We want to make sure that these things adhere to core principles like transparency, immutability, cryptographic algorithms, permissionless consensus. Security is a huge one. Like that is an absolutely 100% non-negotiable one. We only include assets without any known vulnerabilities and strong protection against threats, like 51% attacks, which historically has, of course, been the big concern that a lot of people have had. But Martin, you know more than anyone that the crypto space just doesn't stand still. So we've had to design the Coin50 index to be, as you say, dynamic. So it rebalances periodically, it stays current, it tries to stay relevant. That means we can incorporate innovative new assets that meet our criteria. And for those that don't, we phase them out. But one of the critiques we get a lot is that this doesn't necessarily pick up on the most, say, up-to-date tokens. Like if you get an XRP or a SUI or an HBAR rally in response to whatever market news is in a given period, the index isn't necessarily guaranteed to pick that up. But that's also not what indices do. And I know you know this more than most, but a good example of that is the S&P 500. It doesn't just automatically incorporate new stocks. Like when Palantir, KKR were rallying, they weren't just thrown into the index because they rallied. I mean, eventually these things met the market cap limit and the other S&P criteria, and they were admitted into the index. But that was just last year. So I think that this is something that's really important to mention, because a big cornerstone of our approach is that we try to have a lot of governance. We try to be transparent about this. We want to avoid just any over concentration in any single sector. Like we don't want to just be in layer one blockchains, as you kind of mentioned. So last thing, and I promise this is the last thing I'm going to mention on this, we bring in a lot of external oversight, and we use third-party providers for pricing and monitoring. I think MarketVector is a really good example of that. You guys are, regulated index provider, which definitely adds that extra layer of security, the extra layer of checks and balances, and that just kind of further boosts our credibility and accuracy. Like we can't just decide to change things on a whim, because there's a regulatory process we have to meet, a standard we have to meet. So we try to combine all these things with fundamental principles in order to kind of allow the committee to actually keep the index reliable and responsive to just the innovations we see in the crypto market.
Absolutely. These are very good points. And I think I have to highlight it again. I think especially the point also in tokenomics and free float is, I think, a lifesaver, right? I mean, a lot of people were disappointed last year with these so-called VC coins, right? These low float, high FTV coins, which didn't perform that well. And also, if something happens, it's very often with the newer protocols, right? Not the battle tested ones. And I have also to mention that in the back test, we didn't have Luna. Yeah, so that helped a lot. There was no FTT involved. And so I think maybe the crypto native people think differently, but if you talk to institutional investors, they like that there is an additional screen towards the altcoins. But David, sorry, yeah, go ahead.
No. I was going to say that's absolutely true. And by the way, all this stuff, we try to keep as transparent as possible. Even our regulator, like the Coin50 Index Committee, we have to provide them with all the minutes on our meetings if we're ever requested to. So, I mean, as an index user, and whether you're institutional or retail, I mean, that should also give them another added layer of security, and definitely the feeling of that.
Yeah, no, I totally agree. It's definitely a benefit. And so I really like this feature, this additional feature on top of the market cap screening. But David, what would you say in terms of diversification? I think that's also a highlight of this index, because most of the products you see out there, they are smaller. So let's say a top 10, but even a top 20 index, they are pretty layer one heavy. And so how do you see the design and also the sector diversification for this index? We have a slide here. I think that's pretty illustrative. Yeah.
Yeah, and to be fair, I think things are changing in part in response to our launch of the Coin50 index. But absolutely, I think sector concentration is a really common criticism for these smaller crypto indices, because, as you say, there are these indices that kind of overemphasize sectors like layer one blockchains, which of course are important. I think a lot of people care about infrastructure, but the crypto industry is more than just that. So the Coin50 index, I think, has been thoughtfully designed to kind of mitigate this issue through several mechanisms. And this has been aimed at preserving this broad sector diversification. So, first off, I already talked about our dynamic fundamental selection process, or the rebalancing process, which obviously plays a very key role. I think the dynamic adjustment mechanism actually ensures that we can bring in new promising projects and tokens that kind of meet our criteria and phase out those that just no longer do. So this is a continuously evolving structure that kind of helps avoid overconcentration in any single sector. But also, as you mentioned, we implement this cap on large tokens. So no single asset index can exceed a 50% weight. So even you get like dominant tokens like Bitcoin, this cap ensures that no single asset can just disproportionately influence the index. So this really does maintain more of a balanced representation across all the sectors that we're trying to capture. And then another important aspect is that we do look at a broad market and sector coverage. The COIN50 index, it aims to represent different sectors within the crypto space. So you have smart contract platforms. You can see it on this chart, but I'll read it off anyway. You have the smart contract platforms. You have your DeFi, infrastructure, media and entertainment, payments, store of value, even meme coins, which of course were the breakout sector last year. I mean, it's represented in this index. So this broad coverage really kind of tries to ensure this more holistic and diversified representation of the crypto market. So I think by incorporating these kind of adjustments, cap weights, sector coverage, I think it really effectively addresses kind of this risk of over concentration by providing diversified exposure to the broader crypto market.
Yeah. Yeah, I really like that. I mean, layer one's smart contracts are still dominant, right? But that's a reflection of the market. Nobody knows what it is in 5 years, maybe more depths, right? But if you look at the next chart, it's really beautiful to see all these different coins and protocols, right? You see that you have a high weight in Bitcoin, Ethereum, Solana, also XRP, which are maybe the more approved legit coins. Yeah. And it's a very important aspect when you talk to institutions which are heavily regulated, that you for sure have these blue chip brand names in the index. But if you focus on the last 90-day returns, I mean, who would have thought that you see XRP, XLM, Algorand, right? Cardano. I think nobody, right? And that's again a reflection of, I know that I don't know, right? Everybody was waiting on the Solana breakout, and I mean, Sui is a good thing, but yeah, everybody is focusing on the newest, hottest coins, and now you have the old called dino coins, yeah, the dinosaur coins having a comeback, and so you see that this concept just works because you don't have to worry about this, all these tokens out there, and what should I buy? It's really a guarantee so that you get the crypto market exposure, and that's what I like. So we can talk about cryptos the whole day, but I think what people are interested in, and I know you do a lot of research, and you did also the beautiful paper about adding crypto to your portfolio. I think you had a 2% to 60/40 portfolio. So what were your major findings? Because you did it also with the Coinbase Core Index here and compared it to another index. So what were your major findings when you did that?
Yeah, we really need to update it with the COIN50 index, but we looked at it from a range of like 1 to 5% allocations, and our goal was kind of just like look at this from like the modern portfolio theory lens and try to kind of see what would happen if you incorporate a small percentage of crypto into a traditional 60/40 portfolio of like equities and bonds. And I would say that like there were some really compelling findings here. Um, Obviously, I think most people who do this kind of exercise mainly focus on the risk-adjusted returns. So we definitely point that out. But also, I think the diversification is what I found most interesting. But certainly when you add, like, you pick 2% as a random number. Let's throw that in there. If you add like 2% to crypto of crypto within a 60/40 portfolio, I would say the results, first of all, are notably positive. If you look at that kind of 5-year period, and we looked at that period from 2018 to 2023, so it would have included like a major down period in there. Like adding just like 2% exposure to the Coinbase Core Index, which is heavily biased towards Bitcoin, would have increased the overall return of the portfolio by like 1.2 percentage points. So it's already like a massive kind of shift. And then, like we also looked at it from the S&P cryptocurrency top 10 equal weight index, and the return increased by like 1.05 percentage points. So I think what's really interesting there is just kind of the impact of risk adjusted returns, because if you look at the Sharpe ratio, like that metric measures the performance of returns adjusted for risk. And just kind of like adding the 2% allocation just increased that Sharpe ratio from 0.35 to 0.45, or like definitely in the same ballpark if you use a different crypto index. And it kind of signifies this substantial improvement in the portfolio's efficiency. And I think it definitely just shows you that you get higher returns per unit of risk. But also on the volatility side, this is what's interesting. Incorporating crypto, of course, it raises the portfolio's overall volatility, but the increase was just proportionally less relative to the return boost. So, yeah, we use the COIN4 index, obviously. Volatility did go up, but it went up by like 0.25 percentage points. Like it's really a de minimis amount relative to that. But of course, when a lot of people think about this stuff, they don't think about just volatility. They tend to think about it from the max drawdown perspective. And if you look at the Kalmar ratio, which I know I'm throwing a bunch of like jargon at people, and I know not everyone who's listening is probably a finance expert, but the Kalmar ratio basically compares the average compounded returns of portfolios against their respective max drawdown. So even when you look at that, like with potential higher drawdowns, overall risk adjusted performance was still very much enhanced. So, I mean, in effect, what I'm trying to say is introducing just a small percentage of crypto significantly strengthens the risk adjusted returns and also contributes very positively to diversification as well.
Yeah, absolutely. I mean, it's the same findings we have here with the next slide. Yeah, so we did the exercise with the COIN50, and what's also eye-catching when you talk with investors, again, they have Bitcoin in mind, right? And what you see here is, of course, if you add crypto, as we heard, it's additive. Yeah, you have a better return. Should be better than the blue line, this pure 60/40 portfolio. But people are surprised to see that the COIN50 adds additional alpha. Yeah, when you compare it with the black line, with the 60/40 portfolio plus Bitcoin. And here we were a little bit more aggressive with 5%, right? People think it's outrageous to have 5%. But if you look at the max drawdown, right, it's just 3% more drawdown. Yeah, 22.2 versus 25.2. For me, that's basically the same. Yeah, but if you look at the cumulative return or the CAGR, it's a lot more. Yeah, and I think it's the same thing what you said. Um, I think not adding crypto is a danger now, especially with the bonds as of today, right? The risk, I think, is more with your 40% bonds than with your 2% or 5% crypto bucket, right? Um, Also, I'd like to know your opinion on this whole correlation stuff, right? Um, I mean, we had I think it was end of September 2022. I mean, we have the S&P here, but crypto was pretty high correlated with Nasdaq, and it's just tech stock on steroids. How do you see it? And also, what do you think of correlation between the crypto tokens? It's still relatively high, but is that a reason for you not to invest, or how do you handle such questions?
Yeah, I mean, we get this question a lot too, like, oh, the correlation between crypto and equities. And, this was true, of course, during the last market downturn when the Fed was hiking rates by 500 basis points. But yeah, I get it. It can be a significant concern for like these investors who are looking to diversify. And, I didn't say it before, but like when we did that study we had previously, like when you add crypto to a portfolio, your diversification benefits increase in a faster than linear basis. I wish I could say it's like a geometric basis, or it's exponential, but no, it's basically like for every percent you add, your diversification benefits from the systematic basis, which means that you add risk to your portfolio that doesn't look like anything else in your portfolio. It doesn't look like equities, it doesn't look like bonds. it increases faster than 1%. When you add 2%, it goes up to like 2.5, almost 3%. So like it builds up very quickly in terms of actually giving you less exposure to what you already have. But to your kind of point about this, I mean, like I think also like when people tend to look at these correlations, of course they're happening during like very like exogenous shock events for the most part. I mean, like the two periods where you saw the correlations highest were when like we saw it in the post-pandemic period and when we saw it during like the Fed's extreme hiking cycle. Two things that like of course were kind of more exogenous hits to all asset classes. So it's kind of like I look at it from the perspective of like, oh man, like this hurricane kind of went through town and my house is a mess, my car is like kind of destroyed. Do you say to yourself, oh boy, I wonder what the correlation is between my house and my car? Or do I say, no, a hurricane went through town? Like clearly both things have been kind of like wrecked by this. So I think that's kind of where I go with it. Now, what I want to say about the COIN50 index is I think it does add more to this discussion because it really addresses the challenge effectively leveled by a lot of people of this by utilizing more of a diversified and balanced approach because that further reduces the correlation between these asset classes and it maximizes the potential benefits. So you get more diversification because of something like the COIN50 index. Like it really kind of helps mitigate a lot of those correlation concerns that I think a lot of people have because of the diverse sector coverage, because of the rigorous screening and selection process, because it has the cap, as you mentioned, and the quarterly rebalancing. So I would expect that what you're going to see with these things is that there's going to be a low correlation with equities. The historical analysis that we've done has shown that certain crypto assets, particularly those included in the COIN50 index, tend to exhibit lower correlation with those traditional equity markets. So I think that this is really due to their unique use cases and the market drivers that frankly are a lot more distinct than those that you see in traditional financial assets.
Yeah, I absolutely agree, and I recognize I forgot to show a very important slide which supports your argument here, right? So if you slice the crypto market in different sectors, yeah, and people sometimes are surprised to hear that you have sectors in crypto. Yeah, so we have our own taxonomy here. So you see the dashed line is Coinbase 50, the Coin50 index. But you see there's a huge dispersion sometimes between what yellow, the line meme coins are doing or media entertainment coins are doing, right? So, and people think, yeah, stock picking is hard, but sector picking is easier, right? And I would say that's equally hard to pick the right sector, right? And so, for example, you saw it with payments, right? Which is dominated by XRP, XLM. Suddenly, it's a high flyer, right? And so I think that supports the argument that this constant rebalancing and brings a little bit of calmness, right? It's not the best return. Yeah, we don't have the yellow line. Yeah, we are not 100% in meme coins, but it's also not the worst return. And I think that's something people have to keep in mind when it comes to broad indexes. You have a fair chance again to earn the crypto market return. And I think it will develop similar to what you have in stocks. The majority of stocks underperform the S&P 500 and even a higher share for the Nasdaq, right? I mean, there's a reason that you speak of the Magnificent Seven, right? It's just a few stocks, and so I
No, it's
think that
absolutely true. And I mean, both you and I do research and we look at
yeah,
this all the time. But I cannot tell you what every like AI agent token out there does or what's connected to or what every meme coin is going to do. Like, I don't know who has the capacity to do like the research on everything that's out there. And frankly, like that's if you want to capture more alpha, I mean, that's going to be the way to do it. But then you have to like really be sure that what you're researching on in terms of like sector or even the tokens within that sector are absolutely like on the money in order to make that happen.
absolutely. And I mean, we covered a lot here, right? So also when it comes to this critic, the correlations within the sectors Hi. You have a similar picture for the S&P 500, right? With the exception maybe for energy, yeah, and consumer staples and that stuff, utilities. It's on an equal basis or even higher than the sector correlations with the COIN50. And as you said, I think I expect over time that new use cases will be dominant, that people have a better education, that they understand the protocols better, and that they don't sell anything because something happens with a small protocol and you sell your Bitcoin, you sell your ETH, you sell basically everything. I think that won't happen, and so I also expect that you see lower intersector correlations as well. And I think we covered a lot here. I think maybe we have some questions. Um,
Yeah, I see some.
I see
We have a
some
chat and
here.
we have some on the Q&A.
So
Go
we
ahead.
have, yeah, does Coinbase plan on enabling access to the perpetual markets to investors in the US? I think you have it just for international investors, right? If so, what would be
Yes.
the anticipated date on which access would be granted? I think the date is difficult, but what are your long-term plans? Maybe also on other products. I don't know what you can say here.
We get asked about this a lot. I mean, a lot of these questions that we're tackling already. So first of all, we do have a perpetual swaps. We're a perpetual future on our international exchange for non-US clients. For regulatory reasons, that is obviously not available to our US clients right now. So this question is heavily dependent on really what's going to happen in the regulatory environment. And frankly, I am optimistic that we're going to see some major changes because, of course, we have a new administration. We no longer have the regulation by enforcement approach that the previous SEC and previous executive agencies may have had. So, I'm looking forward to something new, but I also can't say for sure when that's going to happen, what's going to happen. So, unfortunately, all I can tell you is watch this space.
Yeah, I mean, maybe I can shed some light on other things. I mean, the aim is not just having this index as a underlying for perpetual swap, right? It's also meant to be maybe an underlying for a future ETP, whether it's in Europe or in the US. We have to see how the regulation will develop. But you can do so many things. Yeah, it can be underlying for future. And as I said, we see that as the S&P 500 in crypto. And so it would be great to have one day also an ETF based on the COIN50. Why not? I think that would be a great um, contribution to the investor base and would make life easier. So yeah, more to come. I think it's still depending on regulation a little. Um, we have also another question. I think that's more towards us. How important is it to have a regulated independent index provider, right? Um, I think that also depends on um, what kinds of products are you focusing on and how serious are you about your product. So if you're in a very regulated space, yeah, for example, in the ETF space, or if you are talking to a large exchange, derivatives exchange, you definitely need a third party doing that independently and at best having this regulated BMR regulation in place because uh, we have to have index guides in place. Everything has to be based on a clear methodology. For example, when there is a rule change, we just can't change that and tell nobody anything. Yeah, everything has to be announced. Yeah, there have to be notice periods in place and all that stuff. And I think it just helps to standardize a market. And if a market is standardized, then more institutional money can come into that space. And so it just makes sense if we talk about such a broad index that it also comes from an independent regulated indexer. So I know I just screening through. I think That's all here. What I saw so far.
I,
Do
I
you
see
see
one
something?
here that says, how are the, how, well, it's not phrased. I'm guessing how is the liquidity supply of the Coin50 index, uh, small
Yeah.
cap digital asset components enough to handle, and okay, I get what they're saying. Do you, like, I got maybe Marty, maybe we tackle this one. Do you think the liquid supply of the Coin50 index, given the fact that I guess they have these small market cap digital asset components, is that enough for institutional investing? I think that's what they're trying to get at.
Yeah, I think there are two things. I would say it's still challenging, but it's getting better. Also with the whole bull market development. But that's also the reason why we use the Coinbase universe. Yeah, so in that way, it's guaranteed that it's tradable on Coinbase. And another important aspect is also that you can custody it at Coinbase. And so that helps. I also think it helps that you already have a perpetual swaps out there where liquidity is building up. But I think, yes, it's definitely a more challenging product than just a top five index. But I wouldn't worry about it at this stage. Yeah.
Yeah, and you know, and Martin, maybe you know this better than myself, but I mean, like large institutions face this all the time when they're trying to trade equities as well. Like if a large institution is trying to mimic the S&P 500, you know, there are liquidity constraints with smaller cap stocks, and you know, the ones in the lower end of the index, they try to handle through like, I don't know, portfolio replication, sampling, you know, like some of them rely on futures and derivatives. So this isn't necessarily like, you know, an issue that I think is just relegated to just cryptos. I mean, this is something that I think large institutions are already fairly well equipped to handle. But I know that you have more experience on this side, Martin. I don't know if there's anything that you've seen that you can kind of share.
No, I think, listen, you see more and more market makers also interested in that stuff, using indexes. So I really do think that if we talk to each other, yeah, at the end of this year, that we have a complete different discussion than at that point now. Because I think with what is the momentum building up in the US is enormous. And so I think also the liquidity issue will improve substantially. Yeah. And you also see that in Europe. Yes. I think, and keep in mind, we haven't seen the altcoin rally yet. Yeah. So I expect a lot of room to improve. I think we have 2 minutes left or so for the last question.
Oh,
So traditional markets could converge to digital rails through crypto technologies. Does the Coin50 merge or integrate with traditional assets in that world? Or does it become a sector index? Okay. Curious minds want to know. Do you have an opinion on that?
yeah, you know, like I think that already you're seeing that digital rails are transforming corporates in many ways, right? I mean, like I would say broadly speaking, like I see three different kind of ways. Number one is the one that probably most crypto natives are aware of, which is that you see a lot more corporates kind of incorporating crypto into their balance sheets and things like that. But I think more importantly, for use case purposes, you see a lot more like corporates actually kind of involved in trying to like deal with crypto payments and you know use that for stable coins, or like on the third category would probably be utilizing like blockchain technology to kind of integrate their own kind of flows. And you know, you see this a lot with like corporate competitors. You know, like they may be competing in a particular sector, for example, let's say like air travel, or I don't know, like mining or whatever. But like the infrastructure, the rails that are being utilized are kind of like completely universal, and they're working together to kind of make that, because it's going to be better for everyone. But I guess the question really is, does the Coin50 merge or integrate with traditional assets in that world? And I think that one's kind of interesting. Like, does it become a sector index? And that's something you probably know better than myself, Martin. Like, what do you think?
I mean, it depends on your rules. So let's assume we are in a tokenized world and you have everything in one wallet, right? you have tokenized stocks, tokenized bonds, you have your music NFTs, you have your digital art, you have the Coin50 in your wallet, right? I can imagine that you have one day a large cross-asset index, yeah. But I think from the intention we have now, maybe it's then a sector index. Yeah, maybe you have your equities there, your tokenized stuff, and then you blend it with Coin50 because as of now, we don't have the real world asset stuff. Maybe you have real world assets utility token or governance token from protocols doing that. But at that point in time, I wouldn't expect that we have a tokenized Tesla or a tokenized Nvidia in that index. But it's all doable, right? It's just rules. It's a virtual portfolio, so there are really no barriers. Yeah, it's just what you want to do, and is there an investor demand at the end of the day? So yeah, we covered a lot. I think also we are right on time. Um, David, thank you so much for your input. It was really fun, really a pleasure to talk with you about the Coin50 and about the future of crypto, right? And so, yeah, I can just encourage everybody, go on our website. I mean, Coinbase has a website for the Coin50. We have built a dedicated landing page and dashboard where you can see the daily performance and even a heat map. I love the heat map. Yeah, so provides a very good overview. And yeah, you will definitely hear more from us on the Coin50. So thank you very much.
No, thank you, Martin. This is great.